Students Institute. This is in continuation to the series where we are learning accounting for non-profit organization, which is for class 12 accountancy. So today we are going to learn how to prepare a balance sheet. All right. So now the template of a balance sheet is you have liabilities given over here and their respective amounts in this column. Similarly, there is an asset column. You list the assets and the amount which is related to each asset you will mention. One thing about a balance sheet is the totals should match. You should get the same totals on either sides. You cannot use a balancing figure, unlike we did in the case of income and expenditure. So in balance sheet, the totals should match on their own, which indicates that the entries which you have done are absolutely correct. So first of all, you write the title, balance sheet of the name of the company. In this case, it's Gurudeva Education Trust, and you mention the last date of the financial year you're calculating for. So you mention balance sheet of Gurudeva Education Trust as on 31st of March 2018. Here you mention the liabilities. Let me change the color a bit. Let me choose this and change this to white, text color to white, and here let's change this to green. So this one will remain. Let's give a light shade of red to indicate that this is the liability side. So probably I'll go with this. I think it's still dark. Choose the lightest one, and here I will use obviously a green color. So use this one. Yeah, so it's very easy to distinguish. And let me also put the sorry, yeah, let's put these grid lines so it's easier to read. Okay, so basically capital fund, as you can see in our question, capital fund. We'll come to the outstanding office expense and the other stuff. First thing is important is the capital fund. So the capital fund for last year was 1,20,000. So we take that. We are mentioning the year 2017 as it's given over here. So 1,20,000, and then add. As you can see in our previous in the income and expenditure, we were required to capitalize 50% of the entrance fees. So entrance fees was received, 8,000 was received as entrance fees, out of which 50% we had to take it as revenue expense, and 50% we are taking it as capital revenue. Sorry, revenue income, and this will become capital income, and 100% of donations. So this entire amount of 12,000 should be added over here. So 50% of the entrance fee, which is of 8,000, that is 4,000, and then the entire 12,000. Okay, so let me move this. Okay, then there was an excess of 11,300. So as it's given over here, as you can see, 11,300. I am taking that excess of income over expenditure, 11,300. Okay, so right. Another thing is that we also received interest. Okay, this also uh, it adds on to the capital. Capital basically is the money owned by the owner, and since they had done some investments against which they received an interest, which increases the capital the company needs to pay back to the owner. So that's why we add it over here. All right, so let us give one line over here. So entire row, just to make it a little more easy to read. So let me bold it. All right. So right, as you can see in the last year's balance sheet, 35,000 was the loan which we had to pay back. The company had to pay back to the bank, out of which 5,000 they have paid, which is mentioned in the payments column by bank loan paid. So obviously this liability will come down. Basically, liability is excuse me, the amount you have to pay back to the uh, to whoever you owe the money, to whoever you have to pay the money. So 35,000 less 5,000 which we paid this, which was paid this year, so leaving an amount of 30,000. So that's about it. So you're left with 1,82,000. So this is basically 152,000. If we total this up, it will be 152,000, which I have mentioned it over here, and then 30,000, which is 35,000 minus 5,000. So quickly, let's quickly come to the asset side of it. Okay, let's go to our balance sheet. Cash in hand. So we will not take this cash in hand. Instead, we will take this cash in hand. This is the cash in hand which was left at the end of the year. So we'll quickly go and write cash in hand. You have to write it in the outer column straight away. 26,800. No need to do any calculations. Okay, then what's the furniture? So immediately there are a couple of things you need to see. If did we buy anything during this year, or and if there is any depreciation. So depreciation is only for buildings, so straight away we can just copy from here. So we need to write furniture, and the amount is 25,000. Okay, similar thing will do for buildings. So in this case, buildings is 70,000. I don't see any purchase over here, so but there is a depreciation of 10%. So 70,000 buildings, will this time we're going to write it in inner column. So 2017, the amount was 70,000. So we have to do 2018 less depreciation 10%. So I'll directly go and do it. 10% of 70,000, remove 10, so that's 7,000. So we are left with 70,000 minus 7,000, that is 63,000. One thing about calculating percentage, in order to save time, you can use a calculator. Otherwise also, if there is 10%, you remove 10. Like in this case, you remove 10, so it will become 7,000. But if it is 5%, remove 10 and divide this by 2. Half of 7,000 is 3,500. So that will help you save time in your examination. If it is 20%, uh, times 2, 7,000 times 2, remove 10 and multiply 7 with 2, that is 14,000. So like this you can quickly save time for yourself. Alright, so sports material, here you have to be careful. Sports material, there is 20,000, and okay, they've not bought. I got confused with another sum. So we've not bought any sports material this year. There is no depreciation or anything. So straight away, 20,000. You can go and write it in the outer column. Sports materials, 20,000. I hope so. I'm correct. Yeah, that's right. Library books. So library books. Is there any purchase here? That's printing and stationery, salary, purchase of books. Yes, you have a purchase of books. So you need to add this. So here you need to write library books. Similarly, 2017. That's I think 30,000. And then 2018 there was further 10,000 books worth 10,000 bought. So that making it to increasing it to 40,000. So now I'll just give one space if you want to, otherwise it's okay. Okay, so all the items in the assets column are over. So over here we need to come down after that. So printing and stationery, that's a revenue expense, just leave it. Salary, it's a revenue expense. Purchase of books, we've already taken into account. Bank loan, we reduce this in the liability. Subscription, so you have to go item by item, because many a times we would have paid for investments, or we would have bought some other asset which is not mentioned over here. We have to be careful about it. Okay, then subscription outstanding 5,000. So that is also outstanding income is a asset. So how much is that? 5,000. Okay, then salary prepaid. So any expenses prepaid is also an asset. So how much is that? 2,500. Okay, oh sorry, 25,000. Yeah, it is 2,500. Okay, now let's see, capitalize, we've done this. So I think uh, now quickly let's confirm if we have got it right. So that is 182 300. As you can see over here, Excel does the sum for us. So we'll do, I'll just put a formula. Obviously for examination you won't be doing it on Excel, you have to use a calculator and you'll manually do it. So this doing the sum would not apply to you, but in case if you're doing on Excel when you're working, so at that time this is the way you could do it. All right, so basically a quick recap, I'll tell you the steps again. So balance sheet, you go to the liability side and first take the capital account, and whatever like entrance fees, donations, interest, any especially entrance fees and donations, you see it in adjustments. They will say part of it to capitalize or capitalize it fully. So based on that, you have to uh, add it to the capital. So in this case, 50% of the entrance fee is 4,000, which we've added here, and then 100% of the donation, that's 12,000, and the entire interest amount 5,000. And you should go into your income and expenditure statement. I'm not going there because this will become lengthier. We did it in the previous video, you can go and check it out. So 11,300 is the surplus, that means it is excess of income over expenditure, so that also we need to add it back. So we've added all these things and we got a sum of 1,52,300. Then outstanding office expense, the reason I ignored it, as you can see, we had to pay 5,000 which has been paid over here. So for that reason we don't need to consider about this. Bank loan 35,000 was there, out of which 5,000 has been paid off. So it has to get, you write it here and reduce the amount and write it in the outer column, and then there is no other entries, so I've just added them back. If there are any outstanding salary and outstanding expenses, so that you have to write it on the liability side of your balance sheet. So in this case it's not there, so we just move on. Then you come to the asset side. This cash in hand, please make sure, this is where most of the students make a mistake. Do not take this figure, you need to take the figure mentioned in the payment side on the receipts and uh, payments account, not this one, not the one which is mentioned, that's the opening cash balance. As you can see, 15,000, that is the opening cash balance. So we need the closing cash balance, which is 26,800. So you directly go and enter it over there, and then come and check over here furniture. As I told you, from the second item, the flow chart is you need to come and check if any additional purchase has been done and if there is any depreciation that has to be done. So in this case, furniture, there is no additional purchase and there is no depreciation. So we directly go furniture 25,000. For buildings, we did not purchase anything else for in this year, but there is a depreciation of 10% for the building. So that we need to reduce it, less it. So we've written buildings 2017 70,000 less 10%, so making 63,000. Then sports material, there is no purchase, so and there is no depreciation, directly go and write the final amount. Library books 30,000 we had, and addition of 10,000 worth of books we bought, so that we need to add here. Library books 2017 it was 30,000, and 2018 we bought additional 10,000 worth of books, so making it 40,000. So sports material we wrote 20,000 directly outside. And then outstanding subscription, because it's an income, so we will write it over here. So any outstanding income is an asset, and if it was outstanding salary, then we would have written on this side, liability side. Okay. And then salary prepaid is also an asset. If it was income pre-received, then we would have written this side. And then total it up, as I told you earlier, uh, these two have to match on their own, otherwise there's something wrong with your workings. Okay. Thank you so much for watching. If you've not subscribed to my channel, please go ahead and do that. Share it with your friends who need this. And also, because of the pandemic, a lot of people are financially struggling. So please share this to those students who cannot afford expensive coaching, so they can also learn and get very good marks and get into better colleges and make a career for themselves. So I request you humbly to go ahead and share to such friends, and also like and comment, so that will give us an idea of how things are going. Thank you so much. See you in the next video. Bye for now.